Welcome to the program. I'm Okbayemi Owosheni. We start off with business news. In a clear message of zero tolerance for cash flow disruptions, the Central Bank of Nigeria sanctioned deposit money banks for failing to make Naira notes available through automated teller machines during the Yuletide season. Each bank was fined 150 million naira for non-compliance, in line with the CBN's cash disruption guidelines following spot checks in their branches. The enforcement action follows repeated warnings from the CBN to financial institutions to guarantee seamless cash availability, particularly during periods of high demand. And following a backlog of unpaid debt, the Nigerian Communications Commission has authorized telecommunication companies to disconnect the unstructured supplementary service data codes assigned to 9 financial institutions. The directive signed by NCC's Director of Public Affairs, Ruben Moka, on January 15th, noted that the affected banks are to pay their outstanding debt by January 27th or risk losing access to their USSD code. The regulator did not, however, state the amount of debt owed by the 9 banks. We'll take a break now and be back with stories from the corporate world.
Cut. All right. What's your name again? Kemi?
Yes, sir.
Good. Are you ready for us for next week?
Yes, sir.
Next.
No, sir. No.
What? Look, what we need here is one who can speak fluent English.
Give her a chance.
I need a angel to hold me. Hold me, my beautiful angel.
Cut! It is Angel, not Angel. Please, I'm done with you. Excuse us. Kemi was far better.
It's not about our rendition. It's not about our performance here. By the time she and her friends join us in our hotel rooms, you will know how far.
Can I have her phone?
She has a robust profile.
Real robust profile. I do not undercut professional ethics. It is an act of corruption. Not in my country.
Corruption not in my country. Stop corruption now.
Welcome back. First Bank of Nigeria Limited has issued a press release addressing its ongoing legal and commercial dispute with General Hydrocarbons Limited, shedding light on its reasons for getting a court order to freeze GHL's accounts and initiating court actions. The dispute, which has attracted significant public and media attention, revolves around credit facilities extended by First Bank to GHL for the development of oil mining lease assets. In the statement, First Bank provided its perspective, defending its actions as necessary to safeguard its interest and accusing GHL of contractual breaches. And shares of MTN Nigeria soared by over 20% month to date in early January 2025, with market activity exceeding 13 million shares traded. This strong rise reflects a correction from a low in 2024, where the stock dipped to 170 naira in November amid foreign exchange struggles. According to the earnings report released in late October for the 9-month period ended September 30, 2024, net foreign exchange losses spiked by 90.8% year-on-year, reaching 904 billion naira compared to 474 billion in 2023. We'll take a break now, but when Money Matters return, we'll be discussing the Nigerian government offering 2 new saving bonds through the Debt Management Office. I'll bring you details after this break.
Opinions are free, facts are sacred, but truth is universal.
How, in practical terms, can we, for instance, de-escalate the tension?
When you go into public office, you must be ready to answer to the people.
We know where the enemy is. 3 places.
the Lake Chad Basin, the border area between Nigeria and Cameroon, and then the Sambisa Forest.
On Digi 360, we give you a complete dose of everything. Opinion, facts, and undiluted truth.
I hardly believe what politicians say in this part of the world.
A new Nigeria is possible, a future is possible.
We delve into the issues, dissect it so that you can understand it, use it to take action.
I don't think there's any need for any governor to look for grant for ranching.
Digi 360, dissecting the issues.
Welcome back. The Nigerian government is offering 2 new savings bonds to the Debt Management Office. A statement by the DMO listed the first one as a 2-year bond that pays 17.23% interest each year and ends in January 2027. The second is a 3-year bond that pays 18.23% interest each year and ends in January 2028. According to the DMO, people can buy these bonds starting January 13, 2025 until January 17, 2025. The government will start the bonds on January 22nd, 2025 and will pay interest to investors every 3 months in April, July and October as well as January 2025. These bonds have special features. They are tax-free under both company and personal tax laws, and being investors like pension funds and trustees are allowed to buy them. Now, to help us break it all down and provide expert insight, I'm joined by Senior Investment Analyst Simon Ayara. Thank you for joining me on the program, Simon. Now, before we dive into the specifics, I think it's important to lay a foundation for our audience. Saving bonds may not be familiar to many people, especially for those who are new to investing or exploring government-backed opportunities. Now, to start off, could you provide an overview of the Nigerian government saving bonds and explain their purpose in the Nigerian financial market?
Okay, so thank you very much for the question. So the federal government savings bond is just basically an instrument that or an initiative rather that the federal government brought into play. That was in 2017, and the major aim for this is just to help to increase or improve the country's financial inclusion, as well as enhance saving behavior in the country, while also contributing to the country's overall development. So basically, it's just an initiative by the government that was established about, let's say, 8 years ago, March 2017 specifically.
The bonds offer interest rate of 17.23% and 18.23% for 2- and 3-year tenures respectively. Now, how do these rates compare to other investment options available in Nigeria?
I'd say, before I jump into that, the tenures for this particular instrument is basically, or it comes in 2s, that's the 2-year and the 3-year. So looking at the benefit it has, first of all, these the interest or the income from this particular investment is tax-free, yes, as compared to other forms of investment, which is actually tax deductible. And also, we tend to see more interest rates or more earnings or interest income basically from this kind of or from the federal government savings bond than we see on even so many of even Nigerian savings accounts here. So, and also looking at the fact that it's a sovereign instrument, so it also offers the form of risk. It's a risk-free investment for investors, in the sense that even if there tend to be some form of shortfall in cash, the government can always print money. So that also serves as like a good side for the federal government savings bonds compared to other investments.
What factors do you think influence the interest rate set for these bonds by the Nigerian government?
Okay, the federal government savings bond functions like every other government bond instrument, every other bond instrument generally, and this is just hinged on the macroeconomic factor. So since the monetary policy's core mandate is to stabilize price, prices rather. And so when we see some form of increase in inflation, the monetary policy, we tend to take a stance to curb the inflation. Yeah, and the MPR, we have like a benchmark rate for every other instrument, would have to feed into this, or will definitely feed into this instrument. So when we see an increase in rates, like let's take for example the rates that was offered on this same federal government savings bond, that was in 2023. Yeah, so in 2023 December, I think it was around 12%, 11 to 12%. But following the hike, the first 400 basis point hike we saw in interest rates, that was 2024 February. So the next auction, or the next offer that was made by the federal government, we saw rates increase from the 12% levels to 15, 16 levels. So the change in the interest rate, that's the monetary policy rate, have a great influence on the rates that is being offered. But it's definitely determined by the government, unlike every other, like the treasury bills and the federal government bond.
Now, with a minimum subscription of 5,000 naira, do you think this initiative effectively promotes financial inclusion among Nigerians?
Yes, I would say it actually promotes financial inclusion, in that if we are kind of taking a like for like looking at treasury bills now, you'd see that treasury bill has a minimum investment of about 50 million and 1,000, but the federal government saving bond is just 5,000, meaning that even the low income earners can also participate in in this investment. So I think by offering a form of low minimum base, that's for the investment, I think it would actually attract even low income earners to want to invest in the instrument.
What advice would you give to investors looking to diversify their portfolio with these government bonds?
Okay, so different investors have their own aim and objective, right? So if we are looking at diversification into federal government bonds, so this tends to like smoothing the risk effect on the investor's portfolio, because the investment in this federal government instrument happens to be risk-free, like I explained initially. So it seemed to be like there's a less form of default from government. So even if government, like I said, even if government is lacking cash to pay, government can always print money to make payments. So it's a risk-free investment. So if an investor is trying to balance, let's say, it's their current portfolio, maybe a blend of equities and wanting to go into the government bond, I think this will actually help to like minimize the upside risk effect of the other investments, such as the equities, because it will tend to like smoothen the impact that this would actually have on the portfolio, basically. And also looking at the fact that you tend to get like a quarterly coupon payment. Yes, you tend to get quarterly coupon payment in terms of liquidity needs. So unlike there's some kind of investment that you hold till like maturity, not even fixed income, you hold to maturity before you get your what's it called, your benefits. Yeah, so in this scenario now, the coupon in that for the federal government savings bond, the coupon is paid quarterly, so it helps investors to actually still get some form of returns within the period. Yeah. So, and in as much as its effects in terms of the risk is smoothing out, so we still tend to have some form of liquidity. So the basis of that's the take home rather from this is that diversifying into this particular investment will help investors to actually weigh between the risk and return. So in as much as it's getting some form of returns from this, the risk of default would be tapered down by investing in this instrument, basically.
So I'm sure that for most people, this is the first time they would be attempting to invest. Now, what advice would you give to first-time investors considering this bond, and then how can they subscribe to these bonds?
Okay, so I would say that the federal government savings bond is actually a good platform to earn relatively high, relatively high income. That's in terms of investment and all. And in order to subscribe for this, I think the DMO actually have about 129 authorized capital market players. So investors can just reach out to any of the capital market players by filling like a form of a subscription form, yeah, and that will actually help them to begin their investment. So they will have to have stuff in consideration like opening a brokerage account, having a CSS account, and that will actually help them to participate in this offer. And in a case where investors would not want to hold this investment to maturity because it has like 2 to 3 years maturity. In a case where they don't want to hold it to maturity, they can actually sell it in the market because this savings bond is actually listed on the Nigerian exchange. Yes, so it's listed on the exchange rather. So if any investor does not want to hold to maturity, the investor can also sell. So it offers some form of flexibility for investors to be able to benefit from both ends. So basically that's it.
Now, safety is very important, you would agree with me. Now, since the bonds are fully backed by the Nigerian government, how secure do you think they are as an investment option?
Yes, so this will bring me back to what I said initially. So since it is backed by the full faith of the federal government, so what this just typically means is that we all know that government, in as much as we've seen some government default on their foreign bonds and all, but in terms of federal government savings bond or federal government bond in general, so what we are trying to say is that government cannot default. There's a low risk of default on a federal government instrument, and the reason is just that government can always print money to repay when there is need for that.
Now, what would you say is the ideal investment strategy for individuals or institutions looking to balance risks with return with these bonds?
Okay, so balancing risk and return on investing in this bond would cover a consideration of basically some specific risk, yeah, because there are risks basically that are attached to investments. So investors should look out or watch out for also consider some of these risks, which I mentioned earlier, which first of all is like the inflation risk here, because the inflation risk just is a risk that shows an investor that the purchasing power of this investment is reducing as inflation is increasing. Yeah. So if the inflation rate grows faster than or even surpass the rate that is being issued on this instrument, we may tend to see a negative real rate of return. So meaning that the value of the investment, in as much as the investor is getting back the proposed percentage or interest on investment, but the value is already eroded. Why? Because inflation has actually tapered down the benefits that would have been gotten from this high interest rate instrument. So the other risk I mentioned, investment risk. So the reinvestment risk is the risk whereby an investor would want to reinvest his money in, let me just put it let me give an example to tend to clarify that. So a scenario where an investor puts in for the January maturities, that's for 2 and 3 years, and then wants to reinvest after 2 years. So the inflation dynamics, the interest rate dynamics might have changed. So let's assume that our interest rate in 2 years' time becomes like 15%. So it means that the investor will be reinvesting what he had reinvested initially at, okay, maybe I'm using 15% too optimistic. Let's say interest rate has fallen to like 10%. And currently the interest rate is within 17 and 18. So it means that the investor would be reinvesting his money or his or her money in a 10 instrument. So in case now, you'll see that it will be getting more lesser interest than what is currently prevailing in the market. So another risk that should be considered would be like the liquidity risk. So unlike the other forms of government instrument like the treasury bills and the federal government bonds that are quite actively traded in the market. So in as much as the federal government savings bond is also traded on the Nigerian exchange, so but its liquidity is relatively smaller or lesser than that of the federal government bond and the treasury bill. So that's another thing that investor would need to consider while investing in the federal government savings bond. So in as much as all the investors is aiming at maximizing their returns via maybe high interest rates and all, so the investor also should be mindful of this risk, as they might also impact investments.
Now, just before I let you go, Simon, given the recent economic climate, seeing that inflation is on the rise every now and then, do you foresee any changes in the interest rate or terms of this bond in the near future?
Okay, thank you very much. So definitely, yes. I actually foresee a change in the rates that will be issued on this instrument. And this is just on the back of, first of all, before now, we expect that inflation will actually taper down in the second half of the year, and which definitely we believe that the monetary authority would also, want to fulfill its core mandate to also follow suit, since price levels are like coming down. Then we might see MPC also, that the monetary authority also cutting rate, and also even looking at the fact that the country is looking at rebasing. So rebasing at high levels would also still cause some form of taper in inflation, which would also see a counter effect or a counteraction rather by the monetary authority, which would also lead to like a form of rate cut. So since inflation and the monetary policy stance happens to be the key drivers to the rates that is being determined for the federal government savings bond. So when we see this scenario play out, definitely the rates on these instruments would actually also reduce. So meaning that investors that are in the market currently, or that are entering the market like at current levels, would actually see volatility in their returns and also. But as we expect that our prices rather will become stable as time goes, let's say in the near term, so we'd also see some form of or we could see some form of change in the monetary policy stance, tending towards like a rate cut, which will also cause a reduction in rates generally. And also, if you also take a look at what has been happening, let's say in the past 2 months now, you observe that the government is trying to like also reduce the borrowing cost. We also saw that play out in the last treasury bill auction, where the rates for the 364 maturity fell to about 22.6% as compared to 22.9% in the previous. So, and also even the savings bond, we saw that slight decline from the rate that was issued in December. So, following these dynamics, we still expect that if these scenarios play out, would see the impact that's in terms of reduced rates now on the federal government savings bond.
Well, Senior Investment Analyst Simon Ayara, many thanks for lending your thoughts on the program. Well, that's it on this episode of the program. Many thanks for joining us. I'm Okpeyemi Owosheni. See you next time.